What's up, guys? Welcome to my channel. My name is Simon Godfrey. Kindly hit the subscribe button if you are new here and turn on notification bells for more videos to come. Thank you. So today we shall be looking at Japanese candlesticks. We shall be looking at how to trade with Japanese candlesticks. How do you trade with How do you trade candlesticks? So that's what we shall be discussing now. Okay. Candlesticks are very useful when trading, as they show 4 price points. Okay, they show you what they show you the opening price, they show you the closing price, they show you the closing price, they show you the high and the low. Okay, so now this is what our main focus today is how to trade with candlesticks. Candlestick is a way of displaying information about or predicting the next movement of the market. So it helps traders to identify the price reversal in the market and also to determine when the market is at rest. Okay, so it also help traders to predict future price movement in the market based on what price patterns. So now we shall be going to let's jump to our live chart on gold so that we can be spotting it one after the other. Then I'll be explaining how to trade each and every candle sticks or patterns. So let's go to our chart for yourself. So how do you trade candlestick? That's our major focus on this tutorial. So first we are going to start with hammer. If you look at it, all these ones, this is a hammer. This one is also a hammer. This candle, let me expand this more again. This candle is a hammer candle. This is a hammer. Okay. So now, this is also a hammer. This particular one. Come in. Let me use. Yeah, this is a hammer. This one here. This one. So there are plenty of it here. So let's start with hammer. Okay. So what do you understand by hammer? The hammer indicates what a downtrend is turning into an uptrend, which means that what you should be looking for a buy opportunity. The hammer kind of types of a candle pattern is telling you that what a downtrend is coming. If you spot it on a downtrend, it means what you should be expecting a buy. You should be looking for a buy opportunity. Okay, it is indicating what is telling you that this is the end of that downtrend, or is indicating an end of a downtrend. Now, this hammer pattern is very popular because it's very simple and easy to spot. You can see it's very easy to spot. When you see it in a chart, you can easily identify it that this is actually a hammer. So it consists of one candlestick, which is this, is just one. Okay, it consists of one candlestick with a large wick. You can see you can see the length of the wick. This is the wick. You call it the wick or the shadow. Okay, you can see it to the downside. And is what is a small body. It has a small body and a long wick. Okay, so the color of the candle does not necessarily matter. It's irrelevant. The hammer can be a red color or a green color. Okay, what we should be paying attention mostly is how long the wick is, because the longer the wick, the strength of the candle. If the wick is very long, it means what that hammer is very powerful. The candlestick is very powerful. So the strength of a hammer candlestick pattern depends on what the longness of the wick. If the wick is very long, it means what that is a good, or it signifies a what a bullish pressure. Okay, so the small body indicates that what the opening and the closing prices are fairly close to another. Okay, so let's look at how to trade this particular kind of candle. So how do we trade this particular candle? So like I say, you must spot it on a downtrend. It will work perfectly if you see it on a downtrend. It doesn't work in an uptrend. Even though it has more effect on a downtrend. You can spot it on an uptrend, but it has more effect on a downtrend. You can spot it on an uptrend, in an uptrend, but it has what more effect in a downtrend. Okay. So now, how do you trade it? If you spot a hammer like this, you must wait for the next candle to close above the high of that hammer. You can go with me that this is the high of the hammer because it has no what? No upper wick, or shall I say, let me draw a line there. Can agree with me that what? This is the high of the hammer. You can see this is the high of the hammer. Now, let me draw it to the extreme. You can see this is the high of the hammer. Now, since this candlestick closes above the hammer, it means what? That this hammer signal is actually holding, that the buyers are really taking charge of the market. So when you spot a hammer candle pattern, wait for the next candle to close above the hammer. You can see since this candle closes above this hammer, it means what? This hammer is going to hold. But in the situation whereby this candle does not close above this hammer candle, it means what? This one is very, very irrelevant. Is irrelevant here. It is not going to work. So you must wait for the next candle to close above it. Now, so let me shrink the chart a little bit. Let me shrink it. Let me shrink a little bit. Okay, let me pause so that we'll get a wider view of it. We'll get a wider view of it. Very good. Now, let me draw my trend line. You can see that what? Okay. You can see that what? From here, okay, you see how the trend line is coming down. This shows what? The market was going down. It was going down. When you connect 1 or 2 weeks, the trend line is already perfect. Now, you agree with me that what? The market is going on a downtrend. You can see it's going down already. When it's forming lower lows. You can see it's forming lower lows. So it's on downtrend already. Now look at what happened when this hammer here. Look at the hammer was explaining. Let me bring it to our normal form. Now look at this candle. I was emphasizing on this hammer. The moment it was formed and this one closes above it, look at what happened. You can see how the market started going up. So this gives you for confirmation that what this hammer is valid. It gives further confirmation that what hammer is valid. Therefore, you should open a long or buy position. Okay. Then place your stop loss below the low of this hammer. So let me find my long position too. This is what I'm explaining. Let's say you enter with this hammer. We now place your stop loss below the wick of that particular hammer. Okay. Something like this. At the closure of the second candle, you enter. Then to the point where you started rejecting from, you can see risk reward of 1:2, which means that if you are risking $100, you are getting $200. If you are risking $100, you are getting $229 because the risk reward here is 1:2.29. So you are getting what $229. Okay, if you are risking $100. So let me calculate the pips from the point of entry. So from here, at the closure of this candle to where I started rejecting from, you can see about 118 pips. So this is on good, about 118 pips. So this is a good trade already. Don't forget the conditions. You must wait for the next candle that is forming after the hammer. You must wait for the next candle to close above the hammer. The next candle that is forming after the hammer, you should close above that particular hammer that you spotted. You can see since this one closes, it means what? The hammer is holding. So let me look for another example where the hammer does not, the next candle does not close above the hammer. I'm coming. If I can spot one, you can imagine this one. This is already a hammer. You can see this is a hammer. Let me expand it. Let me expand it. You can see this is a hammer. You can see this candle and this one is the same thing because this is a hammer. This is a hammer. The only difference, the reason why this hammer does not hit is because the next candle does not close above this hammer. And even the next candle closes above the high of the hammer, it means what? This hammer is valid. Okay. But look at this one now. You can see the difference. This one, the next candle closes above it. It means what? This one is valid. This one, the next candle does not close above it. It means it's not valid. Okay, so you shouldn't enter for the trade. If the next candle does not still close above it, don't enter. So you can imagine, I didn't mean you enter because you saw this hammer. Look at how the market started going down. So it's very, very important to wait for confirmation before placing your trade. Wait for a good confirmation, a valid confirmation before going or placing your trade. So let's look at the next candle, which is shooting star is the next one. Okay, let me see if I can find it on the chart here. Let's see if I can find a good example of a shooting star. Okay, let me go through the chart very well. Here's a shooting star. Because this particular candle here is a shooting star. Now, a shooting star is a single candlestick pattern that is forming an uptrend. Okay, it is forming an uptrend. So like this one is not an uptrend, but this is a good example of a shooting star. So look for the one that happens that appear in an uptrend. So look for the one that appear in an uptrend. So the candlestick can mark at the top. Okay, and you can see the top here, the wick. So the shooting star is formed when price opens higher, then closes near the opening. It opens from here. Okay. So now the bearish reversal candle looks like the inverted hammer. This that is this shooting star. It looks very perfect as what inverted hammer. Like the hammer we just look at, you can see the inverse of it, the inverted. If you turn it upside down, this is what. If you turn it upside down, it becomes a hammer. If you turn hammer upside down, it becomes a shooting star. Okay, the bearish reversal candle looks like an inverted hammer. So this shooting star pattern is formed by a single candle with a short body. You can see how short the body is. Let me expand it a little bit. You can see how short it is. Okay, like I said, the color of the candle does not matter. You can see this is a shooting star. This is also a shooting star. So the color does not mean anything. The color is irrelevant. This is a shooting star. This is also a shooting star. Okay. What matters is where it appears. If it is appearing in an uptrend, it's very, very relevant because it's a bearish signal. It's telling you that that is the end of that uptrend. That is about changing to downtrend. So let me see if I can spot it in an uptrend. Okay. Let me see if I can spot it in an uptrend. Okay, you can see this is also a shooting star. Let me shrink it a little bit and see if this is an uptrend. Perfect. You can see from the market has been, so let me draw my trend line. It has been in an uptrend. So but for me to confirm that, I need to draw my trend line. So drawing your trend line, you have to shrink the chart so that you can get a wider view of the chart. So let me shrink it. After drawing my trend line, then I will expand it back. So let me draw my trend line. You can see from here, the market has been going up. So let me draw my trend line. Very good. So now let me draw my trend line from here now. So if once I join one or two highs, You can see from here the market has been in an uptrend. You can see. Look at this candle. This is the shooting star candle that I was explaining. So let me expand it now. You see it clearly. This candle works perfectly if you can spot them in a trade. It works very, very well if you can spot it in a trade. So you have to be very, very smart in spotting them. Very, very smart in spotting them out. Okay. Like from the trend line we draw, you can see this market has been an uptrend. Now look at what happened the moment the shooting star was formed. Look at what happened the moment. Do you agree with me that this is the highest high of this uptrend? This is the highest high of it. Now what happened? The highest high now formed what? The highest high formed the shooting star. Now look at what happened. The moment the shooting star was formed, like I always say, before you trade this kind of signal, you must wait for the next candle to give you confirmation. You can see this candle gave a go ahead as what this shooting star is going to hold. It gave further confirmation as what this shooting star is going to hold. Okay. So now since this candle closes below the low of this shooting star, it means what? This is what actually a shooting star. That is confirmation number one. Confirmation number two, the shooting star was found in an uptrend. Okay, two things. The next candle closes below it. Then what? The shooting star was found in an uptrend. Now, how do you trade it? You trade it immediately this second candle closes, which is from here. Then you now place your stop loss above the high of that shooting star. When you place your stop loss above it, something like this, where is our short position to? Okay, from here, then your stop loss should be above your stop loss. Let me expire. Very good. Your stop loss should be above this candle, which is this. You can see. Let me arrange it well. Now, your stop loss should be what? Above this candle. Let me expand it again. You can see the high of this candle. Then your entry here, your stop loss above it. Now let's look how the market went. You can see it started consolidating the moment this shooting star was formed. Started consolidating to this point. And you can see that the consolidation does not exceed the high of this shooting star. It means the shooting star is very, very perfect. Now you can see, since this consolidation does not exceed the high of the shooting star, I have nothing to be panicking. You don't have any reason to be panicking. Okay? It means what? The market will eventually go down. Now look at the whole consolidation, the whole noise here. Look at what the market finally did. It started coming down gradually. You can see from here, it started coming down to this point. Okay, started coming down. So you can see started coming down to this point. Now let's look how many pips in profit. Started coming down. You can see. Let me draw my line from there. You can see. So the market started coming down to that place, or you can decide to even use this one because this is the last drop of that downtrend. So let's use it. Let's use that one. Let's say you have patience for you to take profit. Most persons like holding trade, but me personally, once I target 50 to 60 pips, I'm out of the market. If it's like the market move 1,000 pips, if I can able to catch 50 pips, 50 to 70 pips, or 50 to 60 pips, I'm okay, because I do use a big lot size. If I'm using a one lot size, it means what? The 50 pips is already what? 10 times 50. You can imagine how much it is. Okay, if you are using 0.1 lot size, because this is good. If you are using 0.1 lot size, that is what? 500. Okay. It means what? If you are using 0.1 lot size, it means what? Each pip is $1. So now you using one lot size means what? Each pip is $10. So 10 times 50, that is 500. Okay. That is what? 500. So if I'm getting $500 per trade, I'm okay. So let's say I open like four positions. That is what? $2,000. So I'm okay with that. So depending on the movement of the market, like, you can see from this point of entry, you can see the risk reward there is what? 1:2.64. So if you are risking $100, you have what? You are getting $264 as profit. So this is how you trade your shooting star. First condition state as what? Wait for the next candle to close below the low of the shooting star. The second candle is a second rule state as what? Second condition state as what? You must spot it in an uptrend. You must spot it in an uptrend. Two conditions. First, the second candle that is forming after the shooting star must close below the shooting star. Secondly, it must be found what? In an uptrend. So let's quickly look at the next candle that we have. Quickly look at it. The next candle we are going to talk about is the bullish and the bearish engulfing candles. The bullish and the bearish engulfing candles are both powerful reversal patterns, which are mostly found at the end of a strong trend. Okay, the bullish. Let's start with the bullish engulfing candles. So the bullish engulfing pattern is a two candlestick reversal. Okay, let's see if we can find it here. Let's see if we can find. Okay, I think we can make use of this. Okay, is what is a bullish engulfing candle is two candlesticks. Okay, two candlesticks, two candlestick reversal pattern which forms. No, it forms when there is a small body candle, and a small body candle can either be a red or a black candle, or it's either a red or black candle, then followed by a what? Either green or white candle. So the green candle must engulf totally the other candle, which is what the red one. Engulf means to cover completely. Okay. When or let me say surround it or to cover completely. When you sweep over something, you are engulfing that stuff. So now if you look at it, this candle is engulfing this smaller one, which is this. Okay, it means what is covering this. So this makes it what? A bullish engulfing candle. Okay, let's see if it appears on the downtrend. Let's shrink the chart a little bit to see. Perfect. You can see it's even a downtrend. You can see. So let's draw. Let me still shrink it a little bit. It's good to shrink your chart so as you can get wider view before drawing your trend line. Let's take it from here. You can see it was going down, creating lower lows. Okay, you can see the market, or you can decide to take it from here. You can decide to take it from here, any way you want it. Decide to make use of this, then you connect it with this second one here. With this second one here. So you make sure you connect to the wick. You can see. So it was on downtrend before what? So it was going down. Okay, before this bullish engulfing was found. You can see that it was found on the downtrend, which is this one. Okay, it was found on the downtrend, which is what? The bullish engulfing. Like I see, the first one is what? A shorter candle, which is either red or black, then followed by a green candle or a white candle. And the green candle or white candle must cover the black or the red candle completely. So it must engulf it. Okay, it must engulf it. So how do we trade? How do we trade this kind of candle pattern, this bullish engulfing? First one, the first rule states as what? You must spot it in a downtrend. It works perfectly if you can find it on a downtrend. That is rule number one. Spotting it on a downtrend. In this case, this is a downtrend, so it was spotted on a downtrend. Then, if you want to enter this trade, if you spot it on a downtrend, like I always say, for confirmation, wait for the second candle that is going to form after the bullish engulfing to form. In this case, the candle does not close above the high. You wait for the next candle. You can see the next candle close above this high of this bullish engulfing. Look at it from here. It closes above it. You can see. That's to say this is your entry point. You're going to enter from this point. Okay. Placing your stop loss below the low of the candle of the bullish engulfing candle. So your stop loss is going to be on the low of a bullish engulfing candle. Then your entry should be at where the candle closes. Okay, you can see that this candle closes above what the bullish engulfing candle. Okay, let me measure the pips from the entry. You can see from this entry now, let's see how many pips in profit. You can see 92 pips in profit. Okay, 92 pips in profit. So that this is how we trade the bullish engulfing. This is how we trade bullish engulfing. Rule number one states that what you must spot it in a downtrend. You must spot it in a downtrend. That's rule number one. You must spot it in a downtrend. Then rule number two states what? You must wait for the next candle that is forming to close above the what? The bullish engulfing candles. Okay, you must spot it in a downtrend. Second rule, you must wait for the candle to close above the first. If the first candle didn't close above the bullish engulfing candle, wait for the next candle to close before placing your buy position. Okay. And how do you identify your bullish engulfing candle? Like I say, it must cover completely the bearish candle, which is this. This is the bearish candle, so it must cover it. You can see it covers. Engulfing means what? Covering. So the next one, let's look at the bearish engulfing candles. The bearish engulfing candle. Let's see if we can spot anyone. Let's search for it. Yes, perfect. I've seen one already. You can see. So these things are very easy to spot. You can see. In the other case now is what bullish engulfing. That is to say, the bullish candle covers completely the bearish candle, and it was found in a downtrend. In this case, this is, if you look at it very well, this is an uptrend. Let me shrink the chart very well. You can see from here like this. From here like this, you can see this is an uptrend. This is an uptrend. You can see this is an uptrend. You can see, if you agree with me, this is an uptrend. So now look at where the bearish engulfing was found. You can see. Okay, this is what. So let me expand it a little bit. That is bearish engulfing candles. Okay. So what is non-bearish engulfing candles? Okay. So the bearish engulfing candle pattern is a two candlestick patterns, just like the bullish one. Is a two candle stick pattern that consists of what? Consists of what? Either the white or the green candle. It's either is white or green. The colors you are seeing is from the settings. You can change the color to green, to black and white, or green and red. So the bearish engulfing pattern or the bearish engulfing candlestick pattern is a what? Is a two candlestick pattern that consists, okay, it consists of what? White or green candle followed by a large what? A large red candle which engulfs the what? The green candle. That's mean which covers completely the what? The green candle. Okay. You can see, like I say, this is what? An uptrend. So since it was spotted in an uptrend, Now, how do you enter this trade? How do you make use of this bearish engulfing as your entry point or as your entry candle? Wait for the what? The candle that is going to form after the bearish engulfing to close. You can see in this case, it closed very well. It closed below the below the low of the bearish engulfing candle. So we're going to enter a position from this point. Let's say, where is our short position to? We enter from this point where the candle closes. You place your stop loss above the bearish engulfing candles. The bearish engulfing candle, then you go to the last what? You can see where the market started shooting up from. You can see this is or you can make use of this week, but in this case, we can leave it here. You can see that this trade is what? 1:3.09 risk reward ratio. That means if you are risking $100, you are getting $309. Okay, so all these candles, they are very, very easy to use if you can spot them.